Welcome to the deep dive. Today, we're jumping straight into Godrej Properties Ltd.
Yep, looking at their recent performance, financials, and what they're signaling for the future.
Exactly. Think of this as, your quick way to get a handle on things. We've gone through their latest reports, the earnings call.
Right, so you don't have to spend hours wading through it all. We're boiling it
You
down.
look at the investor call transcript from May 2nd, 2025, the financial filings, same day.
The board meeting notice from late April, the conference call audio announcement, all the key stuff from early May.
Our mission, really, is to pull out the crucial bits about how they did last quarter and the full year ending March 31st, 2025.
And importantly, what they're guiding for next, their strategy. Giving you that well-informed view fast.
Okay, let's start with the performance then. Sounds like the last quarter, Q4 FY25, was pretty significant.
Oh, definitely. They actually called it their best ever quarter. That's in terms of sales and cash collections.
Wow, okay. So a strong finish to their financial year.
Absolutely, and that really boosted the numbers for the whole year, FY25.
And the full year results look quite strong too, right?
They do. For the full fiscal year ending March 2025, pre-sales booking value grew 31%.
31%.
Yeah, and volume, the actual space sold, was up 29%. That came out to 25.7 million square feet. Huge numbers.
And these are all audited and approved.
Correct. The board of directors signed off on the audited standalone and consolidated financials on May 2nd.
Good. Any flags from the auditors? Sometimes you see qualifications or notes.
Nope. Clean bill of health, essentially. The auditor's opinion was unmodified for both sets of results. That's what you generally want to see.
Okay. And for investors specifically, any word on dividends?
Right. Good point. The board decided not to recommend a dividend for FY25, so nothing on that front this time.
Interesting. Okay. Let's maybe get into some of the actual figures. What jumped out from the standalone results? The core company.
Sure. For the standalone entity, FY25 total income was INR, let me see, 4,157.38 crore. Profit before tax came in at INR 1,264.82 crore, and then profit after tax was INR 1,011.01 crore.
Got it. And how does that compare when you look at the consolidated picture of the whole group?
Right, the consolidated view is broader. Total income there for FY25 was INR 6,967.05 crore.
Bigger number, makes sense.
Yep. Profit before tax was INR 1,722.62 crore, and the bottom line profit after tax was INR 1,389.23 crore. Gives you a fuller picture of the whole operation.
Okay, so that's the look back. Now the future. What are they guiding for the current year, FY26? Any targets?
Yeah, they've put out guidance for pre-sales. They're forecasting 10% growth for FY26.
10%. After a strong year, did that feel maybe a bit cautious to people?
It did. That was actually a question on the investor call. Analysts asked if that was maybe conservative.
Right. And what was the company's take on that? How did they respond?
Well, management basically said, look, our internal goal is always to beat the guidance. They pointed out they've hit every single metric in their guidance for the last 3 years.
Okay, so a track record of maybe under-promising and over-delivering.
Kind of, yeah. They also framed it differently, saying that 10% growth on their actual FY25 number is really like a 20% increase over what they initially guided for FY25.
Oh, okay, that adds context.
Exactly. And they mentioned, the current quarter started well with a good launch in Bangalore. They aren't seeing demand slow down yet. So it feels like a solid, achievable base they're setting.
Makes sense. Manage expectations, but aim higher internally. What about new projects? The launch pipeline value.
For FY26, the guidance there is INR 40,000 crore. That's the estimated value of new projects they plan to launch.
40,000 crore, that's a huge number.
It is, and they did add a little nuance there. They said that number has buffers built in, and it could be higher.
How so?
Well, they mentioned some projects, like in Wari, one in Bangalore called Denali, Ashok Vihar. These didn't launch last year, even though they were planned.
Right.
But even without those, they still launched INR 36,000 crore worth last year, against a guidance of only 30,000 crore.
Ah, so if those delayed ones do launch this year, plus the new stuff.
Precisely. The actual launch value could potentially overshoot that 40,000 crore guidance.
Okay, that's a lot of potential new inventory. How about turning sales into cash? Collections guidance.
They're guiding for INR 21,000 crore in collections for FY26.
21,000, how does that compare?
It's a big step up. It's 40% higher than the collections guidance they gave for FY25.
40%.
Yeah, and about 20% higher than what they actually collected in FY25. So it shows a lot of confidence in execution, right?
Definitely. And the fuel for future growth land acquisition, business development.
Right, BD. The guidance there for FY26 is INR 20,000 crore.
Okay.
But interestingly, management themselves called this a low ball guidance.
Oh, so they expect to do much more.
Seems like it. They said they've beaten their BD guidance by an average of 60% over the last 3 years.
Wow.
But they also stressed, the deals have to make sense financially on their own. They're not just chasing a number.
So optimistic outlook, but maybe playing it a bit safe with the official numbers. Let's talk markets. Where are they seeing the most action?
They really highlighted NCR, the National Capital Region,
Mhm.
over 10,000 crore in sales there for 2 years running.
Impressive consistency.
Yeah. And MMR, Mumbai Metropolitan Region, has also been a real standout. Compounded growth over 40% per year for the last 5 years.
Incredible. So they're feeling good about those core markets.
Very confident, seems like. They feel their project portfolio there is strong and will keep driving growth.
What about other key cities? Bangalore, Pune?
They see good potential there, too. They specifically mentioned getting a RERA approval recently for a big project in Bangalore.
Ah, the regulatory hurdle cleared.
Exactly. They expect that to give them a strong start to the year in Bangalore.
Looking bigger picture, what's their long-term ambition for market share? Where do they want to be?
The aspiration, they said, is double-digit market share across the top 7 cities in India.
Double digits. Where are they now?
Currently around 4.3%. So, yeah, a lot of room they see for growth for consolidation towards players like them.
And as they scale up, what about profits,
Mm.
margins?
Big focus there. They want to maintain or even improve margins. For new land deals, new business development, they're targeting a profit after tax, or PPA, margin of around 15%.
How does that compare to now?
They said it's similar to, or maybe even a bit better than, their current sort of imputed margins, which are estimated around 26%.
Okay. And when will we see the impact of all this recent growth on their reported profits?
They expect a significant jump in reported revenue and earnings around FY28. That's when many of these newer projects will reach completion and hit the P&L.
Ah, right. That ties into their accounting method, doesn't it?
Exactly. They still use project completion accounting, so they book most of the revenue and profit only when a project is basically finished.
Unlike some peers who use percentage of completion, PCM.
Correct. So Godrej's reported earnings can lag their actual sales performance because of this method. It's just something you need to keep in mind when looking at their numbers compared to others.
Good clarification.
Yeah.
What do they see as the main things driving demand right now? Why are people buying?
They pointed to, well, wealth creation in India, rising aspirations, pretty fundamental drivers.
Makes sense.
And also that potential consolidation trend we mentioned, buyers leaning towards more established, trusted developers. That could definitely benefit them.
And what do they see as their edge, their competitive advantage?
They talked about their wide geographic footprint across the key cities and, crucially, having strong local teams on the ground in each market.
Local expertise?
Yeah, helps navigate local rules, understand buyers, execute better. They see that as a key strength.
Any updates on specific high-profile projects? People always ask about Ashok Vihar, for example.
Right. Ashok Vihar, they'd planned to launch it in FY26. It's facing delays now. Apparently getting approvals for tree relocation is holding things up.
Tree relocation, is that common?
Seems like it's a broader issue impacting projects across NCR right now, not just them.
Okay. Any silver lining?
Management kind of hinted that the delay might not be all bad. Could mean better market pricing when it does eventually launch.
Interesting take. What about the Bandra project? Always a lot of buzz around that one.
Yeah, that one seems further out. Unlikely to launch this financial year, FY26. They said more likely towards the end of the next financial year, or maybe even later.
Okay, good to know. Let's talk conversions. People walking in versus people buying. Any insights there?
They said it varies a lot, anywhere from, say, 7% up to 25%.
Big range. What makes the difference?
Depends on the project, really. The price, the product itself, the payment plan offered, the whole package. As a rough guide, they said for higher ticket projects, it's often in the 10–15% range.
Okay. And what about things like subvention schemes, where the builder pays initial interest? Do they use those much?
Not really, it seems. They said it's limited use, typically only for maybe less attractive units in a project.
Like ones without the best view?
Something like that, yeah. And overall, it's only a low single-digit percentage of their sales that involve any kind of subvention.
Got it. Shifting gears to costs. Always crucial. Construction cost inflation, what's the trend?
They noted it's been relatively stable, actually, for the last couple of years.
That's a good news.
It is. But they did caution, global economic uncertainty, oil prices. Those could potentially push costs up later. And naturally, as they sell and build more, their absolute construction spending will go up.
Right, more activity means more spending. How does this all impact their cash flow situation?
They expect operating cash flows to stay healthy. They even think they could be positive after funding their land acquisitions, their BD activities.
Even after buying land?
Yeah, depending on just how much land they buy, of course. The main goal is to put the capital they raised recently from that QIP to work.
The qualified institutions placement.
Right. But they also want to keep their net debt below INR 10,000 crore. That seems to be a cap they're watching.
Okay. And finally, their inventory. Do they have a lot of stock ready to sell from all these land deals?
Oh, yes. They highlighted a very significant unsold inventory pipeline from recent acquisitions, estimated value somewhere between INR 50,000 to 55,000 crore.
50 to 55,000 crore.
Yeah. So that provides a lot of visibility for future sales and revenue, a big runway ahead.
All right, let's try and wrap this up then. If we summarize this deep dive,
Yeah,
it really sounds like Godrej Properties had a strong recent run.
definitely. Record Q4, strong FY25.
And they're projecting more growth, even if their official guidance might be, let's say, carefully stated.
Yeah, confident, but maybe a touch conservative on the guidance front, with clear internal ambitions to beat it.
Plus, a clear strategy focused on those key growth markets, NCR, MMR.
And a massive inventory pipeline ready to fuel future sales.
So hopefully you, our listener, now have a much clearer picture of where Godrej Properties stands and where they seem to be heading. Saved you some reading time, hopefully.
Exactly, a solid understanding distilled from all those documents and calls.
So maybe a final thought to leave you with. They have this big ambition, double-digit market share. The real estate market is always changing, right? So what kind of unexpected challenges or maybe even unforeseen opportunities could pop up and really change their growth story beyond just this next year? Something to mull over.
Definitely food for thought. This look gives you a great base, though. And hey, if you want every single detail, the original source materials are always out there.
Absolutely.
Yeah.
And let us know if there are other companies or topics you'd like us to tackle in a future deep dive.